Welcome to another edition of Hours and Minutes, where we take hours of information and condense it into just a few palatable minutes. Our topic today is the life insurance claims process. There's so much time spent on product and underwriting, and a lot of people really don't know what happens when a claim is filed. To discuss the topic, I have asked Michael Tessler, BUI's president, to join us. In his 30 years, there are relatively few people who have had more experience seeing the claims process play out than Michael. So Michael, what does the typical life insurance claims process actually look like?
Well, the good news for advisors and clients is it's pretty straightforward. Generally speaking, each carrier has a claims form that needs to be completed, accompanied by a death certificate, and that starts the process, and usually it's all that's required.
Very nice. And how long does that process typically take? Is it 3 months or 6 months or better or worse?
The good news is it's a lot less than that. I've seen claims paid as quickly as 10 days. I've seen a vast majority of them paid within 30 days. It's only if there is a reason for the insurance company to do any kind of investigation that it takes longer than that, and sometimes can take a very long time.
Wow, 10 to 30 days, I think, is a lot quicker than a lot of people would guess. So piggybacking on your comment there of an investigation, I've seen some of those questionnaires that result when a claim is investigated. So, well, first of all, what typically causes that investigation?
There's generally two situations that would cause an insurance company to investigate a claim. The first is what we would call a quick claim, something that happens soon after a policy has been issued. And the second is if there is information that would suggest that at the time of application, that there was some sort of a misrepresentation on the part of the insured or the advisor that suggests that that claim there may be fraud involved with that claim.
So if they're suspecting fraud, they send out a questionnaire that I referenced, and that questionnaire is very clearly written by attorneys. And, it makes anyone take a little bit of a pause and think, I better be careful about what I'm completing here. Should the advisor be concerned about completing a form like that?
In my opinion, concern is not the right word. Certainly when you're completing something like that, you want to be very careful and be very accurate. But the real truth is the accuracy and the full disclosure needs to start at the time of application. And what the insurance company is looking for is, was there something at the time of application that was in some way misrepresented or disclosed or not disclosed that would have caused them to not issue that policy or issue it differently than they did. In most instances, most advisors have absolutely nothing to worry about. They've answered their part of the questions honestly at the time of application. They'll answer the questions honestly at the time of claim. And if their client did the same thing, then there's nothing to be concerned about.
And how often in your experience does a claim actually get denied?
A claim being denied is a very, very rare situation. And I can tell you based on experience that in almost every situation where a claim was denied, there was irrefutable evidence to suggest that the insurance company should have denied the claim, that clearly there was a material misrepresentation at the time of the application. And it's not something that insurance companies are looking to do. My experience, by and large, is that when claim time comes, insurance companies are trying to do the right thing.
So the person that's being honest, trying to do something right for their family, answering their questions honestly, doing their exam, there's very little to worry about.
Based on experience, that is 100% accurate.
And so when the claim is approved and it's time for payment, is it one lump sum? Are there multiple payments? Is it an electronic funds transfer? Is it a check? Is there taxes due? What does that look like?
It depends. Most carriers give options as to how a claim will be paid. Some of them will offer to keep the money at interest with the insurance company and provide a checkbook so that the claimant can access the money on an as-need basis. If you want all of the money right away, they will usually make arrangements for an electronic funds transfer and have it deposited into your account. And for most, that's actually on the claim form as to how you wish to receive the money. As far as taxes go, again, we don't give tax advice, but under most circumstances, life insurance death benefits are paid income tax free. So if there is $1 million death benefit, the client should expect that $1 million will be deposited into the account of their choice.
Got it. Well, this has been very helpful. I think, that as I said when I started, there's just not enough emphasis on what happens when a claim is actually made and how it benefits families. And boy, is this stuff the stuff that matters. And really, when you look at these industry statistics at the end of every year, the hundreds of billions of dollars that get paid in claims is really not talked about enough. So I thank you for taking the time to educate everyone who's watching this video about how that actually works. So if anybody has questions for future Hours and Minutes, please email them to marketing@buiusa.com.